LVMH just moments ago filing a counterclaim against Tiffany in Delaware Chancery Court. This, of course, a response to Tiffany's own lawsuit filed earlier this month that sought to force LVMH to proceed with that deal to buy Tiffany for $16 billion. Now, LVMH complains saying, quote, the business that LVMH proposed to acquire in November of 2019 no longer exists. What remains is a mismanaged business with no end to its problems in sight. Now, there are three basic claims in this counterclaim. First, LVMH alleges there was a material adverse effect. It says the pandemic created extraordinary damage to Tiffany and there was no carve-out in the deal agreement for a pandemic. Secondly, LVMH says that Tiffany failed to operate in ordinary course. Now, this basically is saying Tiffany paid out more dividends during the 6 months than it should have, and other luxury companies reduced or eliminated their dividends. And it says Tiffany cut critical sales and marketing expenses at the expense of future sales and closed stores before they were required to. Also saying, this is important, luxury companies in the U.S. have a bleak future. It points out here that 90% of Tiffany's sales are brick and mortar stores. 80% of those are in shopping malls. So LVMH saying there's really no hope for a quick recovery of Tiffany. And also, of course, LVMH citing this letter from the foreign minister that they say makes it impossible to close the transaction. Now, the trial for Tiffany's case begins in January, on January 5th. So we will see how this all plays out. But right now, both sides criticizing each other in a way it's hard to imagine them ever coming to an agreement, even at a lower price.